All right, guys, let's talk about the trading journal. In here, we're gonna be talking about pretty much your best friend in trading. This is gonna be some people has it digital, some people has it in a little notebook. I suggest to have a notebook, where you can write yourself, with a pen, like old school. So you work on your brain a little bit. A trading journal is going to be pretty much something that is gonna track your progress. It's gonna track how you act, how you what are your emotions under stress, and you have to do this daily. You have to see where you're improving yourself daily or improving yourself weekly, how good you did this week compared to last week. So the only way you can do that is having a journal. You have to be consistent, you have to be disciplined. Imagine that if I'll tell you that if you don't have a journal, you're going to make $500 this month. But if you have a journal, you will make $1,100 with a possibility to improve yourself faster by 15% every week. Everybody gonna go like, oh, I want a journal. Of course, that's easy. Let's do the journal, right? But when it comes to the discipline to have a journal, to journal yourself daily, to have your playbook daily, you know, that's where people fail. That's where people fail. That's why I wanted to put the playbook and trading journal in this first chapter, because that's where people fail trying to journal, trying to be disciplined. So let's jump in this PDF that I have created. We have here a template that we're gonna go over in a second. But as I was explaining, this is gonna be something that is gonna track your progress daily. It's gonna track your emotions daily. It's gonna track your decisions under stress. It's gonna hold yourself accountable. When he says he's gonna hold yourself accountable in here, it means that since you have this template that that is asking you questions and you have to mark check marks and pretty much you have to answer questions I already put there for you. It doesn't make you or it doesn't let you lie to yourself that much. You can still lie, you can still write, you know, things that are not real while the trade was running, right? But that's only gonna affect yourself. You're trying to like change the way you're thinking, you're gonna change the way your brain is reacting under pressure. And the only way you can do that is tracking it. You can come later, call your friend, and, oh, I got out of the market because of this. But the reality was another, inside you, the reality was because you got scary, you couldn't hold the trade, whatever happened, and you have to write that down. It's either personal, your portfolio that nobody see it, whatever, but you have to hold yourself accountable and you have to say, this is me, this is my fault, and I gotta improve on this part. So this is the main reason why you gotta journal yourself. And part of the big journal, it's journal your own life. You gotta improve your own life. It's either some people wake up in the morning, they don't do the bed, like they don't brush their teeth, they don't do the dishes the night before, so they go to the kitchen, they do coffee with the dishes full, they do them. So I mean to say they do coffee with the dishes full of you know stuff. So they're not disciplined with their own life, and then they step into the computer trying to be profitable, trying to be disciplined in a market that is 10 times more harder than doing the ditches, for example. So you got to start journaling yourself and improving yourself at home on your personal law and your personal life. And then when you improve yourself, that's when you will see that by improving yourself, you're gonna see improving by itself on the market, right? So like I said, you need to prepare yourself mentally. All these pretty much what I explained to you guys. And consistency doesn't come from winning trades. It comes from winning habits, you know? So you gotta start creating consistency more than getting too excited because you made 4,000 today. No, I already made $1,000 every single day, then 4,000 today and lose 2,000 tomorrow, you know? So in this template that you guys can see here, it's pretty basics. I have another template that you guys are gonna see later on. Is going to be my templates, the one that I use in. It's kind of similar to this, pretty much the same. You pretty much gonna ask you after your playbook, you're gonna have your playbook, which is gonna be a sheet that you have with you. This template can be a notebook that you have with you, can be on your phone. This is gonna to journal every single trade. That's after your trade was already placed, you know? So you're gonna place what type of trade you placed, your entry level, your exit level, how many positions you put, how many contracts or how many lots you put on, the risk percentage or the amount of money that you were willing to lose if it was positive or it was negative, and how long the trade run, right? You're gonna write all these things down like that. This is the reason why I told you guys that you cannot lie, you know. You gotta put all these. This is the first section that you're not lying to yourself. What setup do you take? You have to write the type of setup that you take for the first trade, for the second trade, and the third trade. You know, and if you place a trade, for example, like a buy here, and you say here the reason that trade, and you're saying because of, you know, if you're looking for the market to drop and you place a buy, so I already know that you're lying. You know that you just writing something here to fill this out. You know, so if you place a buy here, you should be looking for the market to be bullish, correct? No, no, not for a drop. So emotional, you know, what happens to you during the trade? You know, if the market starts shooting with a lot of volume, you were profit 300, and now you're profit $1,400. When you got desperate, when you went to close it, you closed for $900. And out of nowhere, the market shoot up and hit you TP, which was gonna be like $2,400. So you know you gotta make sure you put there during the trade. I got scared or I got too excited because I saw a lot of money and closed my trade earlier instead of letting it run to my take profit, which is gonna be $2,400. You know, you gotta make sure you be honest with you. And outcome review, what went right, you know, the good things about the trade. Let's see that you close the trade for $900. Like I closed the trade positive for let's see 101, but I could have let it run a little longer, you know, for example. What we run on the trade? That exactly. I closed the trade too early because I got excited and I should have let it run, right? A lesson learned on the trade. I should have let the trade run. And example, this I want to add a thing here. If you if you haven't let the trade run, this is the main thing that happens to a lot of people on my community. If you place a trade and you be closing the trade every single time for $900, while I keep telling you that we be hitting TPs every single time that I send those signals, or the majority of the time that I send that signal, example, at London, and you be closing for $900, and you did it for an entire week. Next week, let it run. You know, only 1 or 2 times to see what happened. And if you hit TP, you're gonna start giving you a feeling that okay, I'm gonna let him run. You know, and this is a different type of mindset that you need to start creating. You know, pattern recognition. You know, it's a couple check mark you gotta do. Like I say, exit too early. You make sure you check mark that one. If you place my signal or you add my signal, you make sure you add that. You always can add more, signals, check marks, and pattern recognition, etc. for you to build your strategy. This is gonna help you build your strategy. You know, what are you good at? If you're good letting trades run, if you're good like let's say you place 20 trades a week and you're closing for $900 almost every single one of them and you're making profit. So you kind of having a strategy right there. I don't suggest you to close early trades, but if that's working for you, you got to start marking those patterns in here. So at the end of the day, at the end of the week, at the end of the month, you probably can have like a lot of those. Like out of 30 days, I close 22 days early, and I finished that month. I made $7,000 a month in profit, whatever. So all those patterns you start marketing. What was the win rate percent, or how much money you made, and just basic journal things. And on the other template that I have more things like psychology things, what happens, the Jose trigger you on stream, because I got some people saying that every time that I told them I'll move trade to break even, they go close the trade. There's different type of things when you go more deep, because right now if I start explaining all of those, the new people probably won't understand them. So this is me explaining you guys why you guys should have a journal and why it's so important and why you guys consistently should track, your emotions, the way you're acting under stress, and what you're good at. You gotta find where are you good at. I got people in my community that are really good at New York. I am not really a good New York people. New York price action is crazy. It's a lot of volatility, and I really don't like using a lot of Fibonacci's because it doesn't respect it well, etc. That is my approach. All the people don't use Fibonacci, don't even know how to use a Fibonacci, and he's doing really well at New York. So you're gonna find what works good for you, and I'll explain to you as much as I can, and you're gonna use it on your own way, and you're gonna create your own strategy, and you're gonna find your own, journal, you gotta create your own playbooks, you gotta customize your own journal, your own playbook, and at the end of a couple months, couple weeks, you're gonna be in a whole different position if you journal yourself.